what are some other things that maybe someone needs to think about? So let's say you have your strategy and you're like, okay, I really, I want to automate this. I'm having a hard time executing it because I can't be there all the time or that type of thing. What are some things that maybe someone needs to think about when they have their strategy that they've tested before they get into an automated form or a bot? What's that transition of going from manual to automated? Like what, what is that like, I guess?
Yeah, maybe on the subject of emotions, because this is a big one for me. I'm very invested in the psychology of trading because I think that's a big part of our edge here, right? Where our ability to manage our positions and manage risk and manage our behavior plays a crucial role in not just your success in discretionary trading, but also in automation. And there's a bit of a handoff there where or trade-off is maybe a better phrase, where if I decide to get engaged in automated trading, the promise is that that's going to create more consistency in my results because I'm stepping back from that discretionary process of managing the trade and letting the trade execute the way it was designed, right? In theory, if I know exactly where the take profit and stop loss should be, or I know exactly how long the trade should be held on for, and what conditions need to be met before it will take an exit, then I should step away and let that unfold over time. But the difficulty for some traders is that once they see any type of, let's say they see one or two losing trades in a row, sometimes they might feel like, oh, I was wrong. I didn't expect that to happen. So now I want to pull the plug on this. When in reality, losses are expected. You've already done a back test and you have roughly a 70% win rate, which means that 30% of the time that trade is likely to lose. And if the first two trades lose, that's not necessarily a bad sign. So I think there's a game of allowing yourself to be patient enough to let the strategy unfold, but then also not feel the need to intervene if something doesn't work exactly as expected in the trade or there's some kind of strange market volatility. So I tend to look at max drawdown as a measure of success. If the strategy has, let's say, a 70% win rate and the profit factor is 2-to-1 and everything looks really healthy about it, there might be 5 or 6 losing trades in a row. And as long as I haven't gone past the expected max drawdown, I'm pretty comfortable with that trading strategy. I still want it to be somewhere in that zone. Like if I picked up a strategy that has a 25% max drawdown and we're approaching 26, 27%, it's pulling back a little bit more, I might need to start taking a look at the market and see what might have changed. Is there some kind of catalyst? Is there an event that has taken place that wasn't accounted for in the history of that strategy? And at worst, I might just reduce size, take a little bit smaller of a position on that particular approach, or just simultaneously continue to run a paper trading account for it so that I'm always picking up the history of those trades and I'm not, completely abandoning it right away. We want to be pretty careful to be patient and allow things to unfold.